crypto is moving as aggressively as the wave of new retail investors. How do I know? Welcome Amin Facts Pro. Well, the charts are clear, but when it comes to new retail, my YouTube views have nearly doubled and my subscribers per video are up by 4 to 10x. If you're one of those new subscribers, a big shout out to you. On top of that, search volume for crypto and Bitcoin is climbing too. But this combo of strong momentum and fresh participants can lead to one of the most damaging psychological traps: overconfidence. Overconfidence bias is the tendency to overrate your abilities, knowledge, or the accuracy of your info. This bias shows up everywhere, but it hits hardest in trading and investing. And as the market has been climbing with hardly any pause, anyone buying in is making money, most of them with zero plan or risk control. That kind of strategy is great when it works, and it can work for a while. But long term, it's a losing game. If this approach always worked, everyone who bought the market would be rich. That's clearly not how it plays out. The first step to avoid ending up like those who give back all their gains, and then some, is to know what part of the cycle we're in. That's what I try to share in these videos, my read on where the markets sit. Right now, I believe we're in the easy money phase. Trends are strong. Markets are breaking out. If you bought any time in the past week, you're probably ahead, no matter the day. The next step is to ask yourself if your success came from a well-executed plan or just a lucky break. And hey, nothing wrong with catching a bit of luck. I take it when it shows up. But when the trend shifts or even just stalls, markets are built to trick most people most of the time. That's when the crowd gives up their gains, often with a little extra pain. If you learn to read charts, you can spot these signals early. That's also what I aim to help with in these videos, keeping you one step ahead. So with that in mind, let's dig into the charts, trends, and data. Quick reminder, I'm not a financial advisor. Always do your own research. Past results don't guarantee future performance. In this video, we'll cover the usual suspects: Bitcoin on both high and low time frames, plus Ethereum and XRP. We'll also look at the macro structure and the sentiment signal, familiar for many of you, but I'll give you my updated take. Let's start with XRP, which is still pushing toward new all-time highs. It got close recently, sold off into the close, but still locked in the highest daily close in its history. In strong uptrends, the hardest thing is keeping it simple. Buyers are in charge. So now's the time to step back, look at the key support zones, and ask what would need to happen to shift sentiment. I've been talking a lot about $3.40. That level is key because it's the prior all-time high from January. If price holds above it, that's strong territory, likely reaccumulation. But if we break below that zone, get some closes and lower highs, then watch for a bigger correction back to the previous resistance around $3, now potential support. That level also aligns with past selling and resistance in March and is a psychological round number. So if we break $3.40, I'm watching for a test of $3 flat. But as of now, we're holding strong above $3.40. So we expect trend continuation or consolidation in this range for now. As I mentioned in yesterday's video, if you missed it, I'm not too concerned with trying to call upside targets in these trends. You ride the wave until key levels or support zones start to fail. Until then, just track the market lows, bar lows, candle lows, swing lows. I use the TAGN swing indicator, but if you don't, just pick a reliable one to track trend and support. To sum up XRP, trend is up, buyers are in control, and if $3.40 breaks with confirmation, I'll watch for a move toward $3. On to Ethereum, which is hitting selling pressure near our anticipated pivot at $3,800. That doesn't mean a crash. Pivot points are potential resistance areas. If you've followed the channel, you've seen them hold up again and again. It's not about being right. It's about spotting high probability zones so you're not blindsided. Right now, $3,800 remains resistance. Sellers stepped in here. To start aiming for previous all-time highs near $5,000, we need a break, a few closes above, and ideally some higher lows. That gives us confidence. It's the same pattern we saw before. Break above resistance, hold with closes and higher lows, and then launch to the next level. If that doesn't happen, we could see some sideways or even a dip toward $3,400, the next pivot support. To be clear, I'm not calling for a dump. I'm saying that if the trend shifts, $3,400 is my level to watch. For now, Ethereum looks strong, trend is up, buyers are in control. If you want more on shorter time frames like 4-hour or 1-hour charts, let me know in the comments. I might go back to doing separate Bitcoin and altcoin videos like I did in the last bull run. Otherwise, I'll keep it to daily charts like this. For Ethereum, resistance at $3,800, support at $3,400, confirmation needed for a breakout to $4,100, and beyond that we're heading into price discovery territory again, something ETH hasn't seen in years. Next up, market data. Let's get a pulse on volume, liquidations, and sentiment. Our daily exchange volume chart has finally broken out of its long downtrend. We've been watching for a break above $50 billion per day, and now it's holding. We've seen a quick pause, but also a sharp bounce back in volume. That's a good sign. Even if price is correct, if volume stays high, it suggests a short-term dip with higher prices to follow. 24-hour volume is up nearly 17% to around $430 billion. That lines up with the daily trend. 24-hour liquidations are sitting around $500 million. We watch for spikes to $1 billion. Those often mark major turning points. A spike during a rally? Potential top. During a dump? Potential bottom. There's often a 12 to 24-hour lag. Right now, no major spike. So no signal yet, but keep an eye on it. Long/short ratio is about 3% apart, but with low liquidations and a flat Bitcoin market, I'm discounting the signal slightly. If it pushes to 4%, pay attention. These can trigger snapbacks. Markets like balance and 50-50 is where they tend to mean revert. Our sentiment signal hasn't triggered a top yet. For new viewers, orange on the top plus dark green on the bottom equals potential major top. Last happened in December and January before a 30% correction. Same in March last year. That setup hasn't appeared yet, so any correction is more likely a dip than a collapse, at least using this tool. Now to Bitcoin on the daily. We're seeing price and time converge. When the market slowed here, I said it might come back to retest the trend line. That's playing out now. We're hovering around $117,000 with indecision. Bulls and bears are battling. Each rally is sold. Each dip is bought. Eventually it breaks out, often when no one's watching. The 4-hour chart shows more clarity. I've marked the $119.5 thousand zone in orange, the high risk of failure area. I first pointed this out when we were correcting here. I said if we bounce, this zone is where a rally might fail. Since then, we've tested it several times, but no solid close or higher low above it. Sellers keep winning. To flip sentiment, we need that breakout, follow through closes, and ideally higher lows. If not, look below. Key support sits around $115.5 thousand and $114,000, the 50% level from the last leg up. I use the fib retracement tool with only 0, 0.5, and 1 levels on. If those break, we look to the broader support between $110,000 and $112,000 again. I'm not saying it'll drop. But if it does, those are the areas I'm tracking. Big picture macro structure. everything still lines up. I believe we're in the final fifth wave of this bull market. Wave 1 and 2 are done. We're now halfway through Wave 3. That leaves one more major correction and one final push to the peak. I've broken down the internal wave count to 5 smaller waves within Wave 3. We nailed Wave 2's correction, and we're now likely deep in Wave 3 of 5. Sounds complex, but check the macro playlist if you're new. If this is wrong, we'll know fast. My invalidation is a break below $3.55 trillion total market kept the prior Wave 1 peak. If that breaks with confirmation, we'll reassess. Until then, this structure looks solid. If you're new here, I highly recommend joining our YouTube channel and subscribe, like, and share. Thanks for watching the video. That's my view of the market right now. Wishing you health, wealth, and happiness. Catch you in the next one.